Hello, this is宝鉅. I'm the CEO of PC Financial. So I'll be talking about some of the market performance and development over the last couple of weeks, as well as our market outlook going forward. Now, from the start of the year till now, generally markets have been on a rise, and we have rebounded substantially from the market falls since last year October. So, for example, if you look at the US market, as the S&P 500 index has actually gone up by 10.6% year to date. If we look at the MSCI Asia ex-Japan index, that has gone up 10.39% since the start of the year. So generally, investors have been a lot more positive. We also agree, and looking forward, we are also of the view that there will still be upside in markets, and so there's much to be positive about. Having said that, there are still risks in the market. So, for example, if you look at the geopolitical situation right now, India and Pakistan, there are still tensions over there. US and North Korea, also the talks fell through. A lot of the rebound has actually been attributed mainly to the temporary pause in the economic war between China and US. And basically, most analysts are of the opinion that both sides will take a step back, they will come into an agreement, and hopefully the trade war will subside. So generally, we are of that view also. However, having said that, until there has actually been some sort of announcement from both sides that they have signed something, I think it's too soon to celebrate as well. So that remains one of the key risks going forward. Now, another thing is, generally, if we look at the overall situation, growth is still there, all right? If you look at this year, generally for US, for example, IMF forecasting 2.3% for US growth this year, economic growth this year. IMF is also forecasting 3.5% growth for the globe, for the world, right? So generally, from an economic standpoint, things are still growing. However, also, it should be noted that this year's growth will be slower than last year. US is expected to grow 2.3% this year. This compares to US economy growing 3% last year. So things are slowing down a little bit in terms of the growth, and hence, I think given some of the geopolitical tensions, as well as there's still some uncertainty regarding the US-China trade talks, there is reason to believe that there will still be volatility going forward because there are still risks abound. Hence, in conclusion, we are of the view that going forward, markets will be positive, markets will go up. However, given some of the risks that's still around, it makes sense to have a diversified approach in terms of investing. So with that, I end my presentation. See you next time. Thank you.